Now, if you look at the price chart of Raffles Medical, you realize something very interesting. Look at this red arrow over here. What do you see? You realize that Raffles Medical share price has actually suffered in this pandemic, losing about 20% all the way until November. And isn't healthcare stock supposed to be a very defensive sector as what many people claim it to be? And the surprising part is since November, which is also the news of vaccination, its share price has actually shot back up, looking much like a tourism industry's share price movement. Now today I'll be sharing with you 4 key parts. The first, I'll be sharing with you how to understand the business segments of Raffles Medical. The second part, I'll be sharing with you the trends, the long-term trends that Raffles Medical is embarking on. The third, I'll give you my verdict on Raffles Medical, and last but not least, I'll do a quick comparison between Raffles Medical and Parkway Life Reit. So if this topic interests you, continue watching on. Hi guys, welcome back. Now to understand Raffles Medical, there's 3 key business segments. The first is hospital services, the second is healthcare services, and third is actually investment holdings. Now in this tutorial, I won't be touching too much on investment holdings because Raffles Medical is meant to be a healthcare player, not really too much as an investment player. In any case, it's only 6% of total revenues as this chart has actually shown. Now to understand healthcare services, there are actually GP clinics and specialist clinics. Now to provide a good solution as a value chain, the idea is to round up GP clinics and specialist clinics, correct? That's why they're actually network providers right now in the market, and those are actually competitors to Raffles Medical. For example, Fullerton Health. Fullerton Health works with a few insurers. Some of the MNC's group employee benefits actually tie up with Fullerton Health, so they are a formidable competitor in my opinion to Raffles Medical's business segment of healthcare services. But Raffles Medical themselves has actually inked up a collaboration with NTUC Income, and this is actually done in 2018. So actually that brings in some potential patient load to the GPs and specialist clinics. And to show you numbers of the healthcare services, let me pull up this chart for you to see. This is actually pieced by myself. I actually looked at books from 2016 all the way to 2019. And what can we see over there? Revenue has been growing consistently, not bad. But this portion which I boxed up, reportable segment profit before tax, this is actually trying to show you the profitability of this healthcare services segment. And what do you realize? This number has been stagnating even though the revenue has been climbing, correct? Which means margin has been declining. And not only that, if you look in terms of the margins, it's actually quite poor. 5, 6, 7% net profit margin. That is actually quite a tough business to be in. So healthcare services, while everybody thinks running a clinic is very profitable, it's actually not that true. And I'll give you some reasons a bit in a while. So if you understand that running clinics is not so profitable, it goes to help you understand why some other listed companies in Singapore like Healthway Medical Group, they have actually showed in their share price terrible performance over the last few years simply because they are not so profitable to run. And for the Healthway Medical, I can actually show you, they are now trying to do a turnaround story. A few years ago, there was some turmoil within the company itself. You can go and dig out books. But that company right now is more of like a turnaround story. Running clinics but can't be profitable, right now restructuring to try to get into profitability. So again, running clinics is not as profitable as what people think as it to be. So where is the money actually easier to be made? It's actually in hospital services. Let me pull this chart for you to see. In terms of hospital services, the first thing that you should realize is the net profit margin is way higher than running clinics itself. But having said that, hospital service segment for Raffles Medical has also been declining. So that is quite sad. Not only are they seeing the healthcare services margin declining, they're also seeing the hospital services margin to be declining. So double whammy in a lot of ways. And I don't even know this or not, but if you call 995, you'll be sent to the nearest government hospital or Raffles Hospital. I don't even know that or not. You cannot choose to go Gleneagles yourself, but Raffles Hospital has actually partnered with government and they actually take in public load for 995 costs. So that is actually, in my opinion, some public service that they actually do. They do have a ward in particular that they allocate for public 995 to come in. So that's something interesting. In the next segment, I'll run and touch on the trends of Raffles Medical. Now, if you have followed through here, you do know that the numbers for Raffles Medical does not look that good. And let me pull up a chart from Maybank Kim that really summarizes things fantastically. What you can see in this chart is that the yellow bar, net revenue, has been growing across the years. But because net profit has been stagnant, if not slightly declining, the net margin, which is the red line, is a worrying drop. So as any business owner, the main thing that you want is profit, because profit can yield dividends eventually to a shareholder. And because of that, a consequence is the earnings per share has also been flat over the last few years. Now you may be thinking, how come revenue is growing and yet profit is not growing? I'd like to help you understand that question, and it's actually a very simple logic. If you look at this chart over here, you realize it very quickly. This I've boxed up is staff costs, and this has been growing tremendously over the last few years. As we know, healthcare means you employ nurses and doctors, and labor is not cheap. The labor market for doctors is very tight, and you have to pay good money to attract the best talent. And as always, if your cost is increasing together with your revenue, your profits are not growing. So that is a key consideration and an important part to understand when you buy a healthcare stock. Now, the peak of Raffles Medical, in my opinion, was close to 2015. When I look back at the books, you realize that the high growth phase for Raffles Medical kind of ended at that point of time. As I boxed up over here, the net income growth at that point of time, the 5-year annualized was still at 8+%. And actually, when I pull up earlier books, it goes to show that group profit has been growing, earnings per share has been growing all the way until 2015. So, in my opinion, Raffles Medical's phase as a high growth company ended in 2015 already. And what it goes to show is, if we look at a historical price earnings chart, this is actually a source from Bloomberg itself, you realize that if it's trading now at close to its average historical PE, it may not be justifiable because quite obviously its high growth has ended in 2015, which was around this average historical PE. So in my opinion, Raffles Medical should be trading lower than its historical price to earnings ratio. So that's my take on things. I'll give you more insights in the next part where I'll give you my verdict on where the business is growing towards. Now, if you have benefited, smash the like so that more people can see valuable content like this. And again, inviting you to press on the subscribe to join our family, become more financially savvy. Now, as a start of video, I actually shared with you that Raffles Medical's share price has showed that it's not so defensive and in fact looks like a tourism stock's share price. And this actually explains things a little bit further. What can we see in this summary? It's mentioned that foreign patients comprise of 20 to 30% of revenue for the group. That is why they actually rely on foreigners, just like how hotels rely on foreigners. That's why Raffles Medical is not so defensive as what many people claim it to be. And not only that, what I've boxed up at the top is dental treatments, health screenings, and non-urgent consultations. These are actually non-essential services. And this revenue has actually been postponed because of this pandemic. So Raffles Medical is not as defensive. I'd like to reiterate that point also. But the main part that I'd like to draw attention in terms of analyzing Raffles Medical is its direction to move towards China. And interestingly, as I was looking through documents that's been mentioned across the years, why Raffles Medical chose to not move into Malaysia? Because I've actually invested in HMI before. They are a hospital service. They've actually been very profitable and they own a hospital in Malacca itself, doing medical tourism. So curiously, I was looking through the things, and CEO has actually mentioned that if you move into Malaysia, there's only Penang, Johor and KL, which is true. But my gut feeling is if they do move into Malaysia, it creates cannibalization from the operations of Singapore itself. Medical tourism is important, Raffles Medical, and if they do operations in Malaysia, it'll just be really impacting their own core business. That's why they've focused exclusively on China's development. Now, this segment, let me help you understand where Raffles Medical is moving towards. Raffles Medical, if you look at the highlights for Raffles Medical, you see that the results now they report excluding results of China operation, and that's in large ways correct also, simply because there are losses going to come about. Now imagine this, if you open a hospital, you need to build your brand before patient load starts to come in. You need to tie up a lot of medical systems, get involved with the local medical authorities and stuff. It takes years to become profitable and see the right level of patient load. How much losses and how long it takes? This actually explains things. The Chinese hospitals are expected to break even in about 3 years' time, and in the first few years, losses can amount up to $10 million. But Raffles Medical is undeterred. They are moving towards China big, and I have something to show you also. Dr. Lu, who is the CEO, has actually mentioned that they're not looking only at 2 hospitals, which they've already committed to. They're looking to move into all the tier 1 cities in China itself. So very ambitious, which is good. But as of right now, they've actually opened the Chongqing hospital already in 2019. The Shanghai one will likely open in 2021 only. And Raffles Medical has actually moved up some key staff towards the Raffles China Healthcare Division. Ms. Go An-ni, who was previously CFO, is now the deputy for that segment itself. So they are really focused on that part. Now, in this last segment, I'd like to help you understand the difference between Raffles Medical and Parkway Life Reit. Although some people say they are both in healthcare, they're actually very different. Parkway Life Reit actually owns the property, correct? In terms of the value chain, they only own the property. They rent out hospital beds, clinics, etc. And as I can show you over there, the lease, they all have an escalating formula to things, which means they are the landlord. Next year is an increased amount of rental. And if the clinics and hospitals don't collapse, they still collect rent itself. That's why Parkway Life Reit has been able to show you, as an investor, an increasing amount of dividends per unit since IPO, a fantastic result. That's why I'm a big believer in Parkway Life Reit. And the main part, or the main difference of where they've avoided is actually, as I've already said, staff costs. You don't need to pay doctors, you don't need to pay nurses. Staff costs is not easy to manage for a healthcare service, something that Raffles Medical has to grapple with. But Raffles Medical can show, a higher growth rate if they do well in China. So again, totally different place. So consider that. And if you want to find out more on Parkway Life Reit, I've actually a previous tutorial. Let me show you this over here. It really deep dives a little bit more onto the assets of Parkway Life Reit. And with that, I'll see you in that video, inviting you to that. Take care and goodbye.